Hello everyone. This is the pre-market report video for today, 21st February 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, both HDFC Bank and ICICI Bank was in serious pressure. HDFC Bank dropped above 2% and ICICI Bank dropped above 1%. Possibly there were two reasons. So first, let's understand the issue and then we'll discuss our regular stuff. First, this is the Nifty's official fact sheet weightage document that NSE release every month end. For sure, I will remember to attach the link in the pinned comment. Please have a look. Here, as per this NSE fact sheet, HDFC Bank and ICICI Bank is the two top index heavyweight stocks. At present, Reliance slipped to the third. So, HDFC Bank and ICICI Bank alone together consist of 20.5% weightage in the Nifty index. And now there is no Bank Nifty weekly expiry. So, the market manipulator on the expiry day or before the expiry day, they got only two index to manipulate, one Nifty and another Sensex. Sensex retail participation is very much limited. So if they want to manipulate the Nifty, then it has to be through these two banks only and mainly HDFC Bank. Hence only yesterday early morning itself at the few minutes of market opening, there was multiple short position on HDFC Bank. Large deals worth over 230 crore rupees was placed. On top of that, before 10 a.m. itself, more than 50 lakh HDFC Bank shares was sold and bought. Just for info, the 10-day average volume was only 80 lakh shares. So out of that, in the first 45 minutes itself, yesterday HDFC Bank trade volume exceeds more than half of the stock's 10-day average volume. Hence, it's possible those who want the weekly expiry in favor of their open position, possibly FII might short at the HDFC Bank. We can see this in the first HDFC Bank share price action itself. In the first 45 minutes, it dropped over 2% and maintains throughout the day. And then as Nifty recovered, they started to manipulate ICICI Bank. So if you see the Nifty contributor, ICICI Bank and HDFC Bank alone contributed for 90 points on the downside. That might be the first reason. Then the second reason, there was an info leaked in Reuters.com. In the Indian government, there is a proposal to increase the insurance cover for bank deposits to 8 to 12 lakh rupees from the current 5 lakh rupees. Just for everyone's benefit, let's take an example. If somehow somebody steals the deposit from the Indian bank means, then at present, Indian banks only pay 5 lakh rupees to that deposit holder despite they held multiple crores in that bank. So that insurance compensation increasing it to 8 or 12 lakh rupees means then the insurance premium for the Indian banks will increase drastically, which in turn expects to affect the bank's net profit. Hence only the large two Indian banks affected significantly. Those were the two possible reasons I can think of, or I can able to find out why HDFC Bank and ICICI Bank had a huge pressure yesterday. If anybody think different, please let me know in the comment section. And if you see the sector wise, finance and private banks were the draggers. On the other hand, metal, energy, PSU bank and auto increased above 1% and supported the market. Here, metal increased because early morning Bank of China paused the interest rate as expected, and in the press conference they said they will focus more on fiscal stimulus to increase the consumer spending and also signals possible rate cut in the next month. Overall, after 2 days, number of stocks that advanced finally outpaced the stocks declined. 66% increased and 31% decreased. About institution, no stopping in FII selling. Just for info, yesterday they back to their average gross sales and net sold for 3,300 crore rupees and DA net bought for 3,900 crore rupees. Then regarding derivative market analysis, near 25% of the index option open interest either unwound or expired. So now proprietary traders again back inclined to bearish stance. At the end of last session, they are holding 2.7% open interest net bearish position and FII holding 6.1% net bearish position. On the other hand, retail traders turned super bullish as they are holding over 9% open interest net bullish position as they sold lot of put options. Index future wise, no status change. Open interest increased by 2%. Then coming to US market, last night Walmart gave their 2026 sales projection, which was below the previous projection, which in turn crashed the US market, and Walmart's share price decreased by 6%. Dow Jones dropped 1%, S&P 500 was down by 0.43%, and Nasdaq decreased 0.47%. In case of VIX, it increased 2.5% and moved above 15.5. About oil, again there is an escalation on Russian oil pipe supply in Kazakhstan, and US stock inventories showed less stockpile, which in turn increases the oil price for the third day in a row. At the time of this video, WTI crude trading around $73 per barrel, and Brent crude traded at near $77 per barrel. Regarding Indian ADR, as it is, only Infosys close to positive, but less positive than Indian market. So if we calculate the arbitrage difference and with the dollar premium adjustment, all the Indian ADR, including the Reliance GDR, all indicating negative arbitrage of 0.5 to 1%. However, those ADR negativity was not fully transferred onto GIFT Nifty. Early morning today, it traded at 22,906, equating that with the spot market. For now, it's indicating the gap down opening of 20 to 30 points. As a summary, US market closed to negative, Indian ADR and GIFT Nifty also indicating a negative opening. However, there is a hope in the pharma sector that India might reach the trade deal with Trump for the pharma export, so we can expect the pharma stocks to be on focus. Then there is a plan from Finance Ministry that they are going to conduct the performance review on PSU banks, but I don't know its impact on the stock price. And stock wise, TCS made a new collaboration with Salesforce to help customers for manufacturing the semiconductor chip, so we can expect TCS to be on focus. Moving on, as per stock open interest, Nykaa, Laurus Lab, Page Industries, Adani Green and HUL got an increased open interest along with a negative close, indicates the short build-up. On the other hand, BSE, Supreme Industries, Apollo Tyre, Prestige, NCC and Adani Total Gas got an increased open interest along with a positive price close, which means these stocks got the long build-up. About the things to look out, early morning Japanese core inflation was released, which comes as 3.2% above compared to December month as well as above the analyst expectation. So the macro is not good. Then during our market time at 10:30 am, India's February month manufacturing and service PMI data is due to release. Please keep tab on it. It's a very important today. And in the afternoon, Germany, UK and whole Europe's PMI data is scheduled to release. Then after our market close for US, their PMI data and housing stats are the important items we need to keep an eye out today. Coming to technical, Nifty opened more than 100 points gap down, however gradually recovered those losses and it was range bound throughout the session and also closed below 23,000. Thus on the daily chart, Nifty formed a bullish candlestick pattern with minor upper shadow indicating some strength build up. We can see Nifty consistently defended the 22,900 level on the closing basis for the fifth consecutive session, which is positive, but overall the sentiment remains weak as Nifty is still trading below all key moving averages with a continuation of negative bias in RSI and MACD momentum indicators. Hence, if Nifty holds this level, the chances of an upward move are high in the upcoming session, and if it clears the first hurdle of 23,000, a rally towards 23,200 to 23,400 can't be ruled out. However, on the downside, 22,700 is expected to be the crucial support level. In case of Bank Nifty, it opened around 250 points gap down and was range bound throughout the session, then closed at below 49,400. Thus, on the daily chart, Bank Nifty formed a doji-like candlestick pattern indicating indecisiveness among buyers and sellers. In addition, it could not sustain above the short-term moving averages 10 and 20-day exponential moving average or the midline of the Bollinger Band. But on one positive note, the near-term trend still seems to be positive as long as Bank Nifty holds above the low of February 19, 48,800. Hence, Bank Nifty must sustain above 49,400, which could trigger the momentum towards 49,800. A breakout beyond this level may open doors for a rally towards 50,600. On the options front, the maximum call option openers was at 24,000 strike, followed by 23,500 and 23,000, with maximum new call option writing at 23,500 strike, and then 23,000 and 24,000. On the put side, the maximum open test was at 22,000 strike, followed by 23,000 and 22,500, with maximum new put option writing at 22,300 strike, and then 22,000 and 22,800. Thus, from options data, the immediate resistance for Nifty might be at 23,000 and support at 22,800. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.